The savings and loans and microfinance sector is undergoing a renewed scrutiny as regulators are also deepening its oversight. Now, these institutions are also working to rebuild confidence within this particular sector. In this interview, I speak to the Chief Executive Officer of the Opportunity International Savings and Loans Company. Mr. Yerekuu, thank you for your time this afternoon. 3 to 4 months. How's it going?
Thank you very much, sir. Thanks for the opportunity to leverage your huge platform. 3 months appears a year so far for me. I took off from the predecessor on 1st of October. It's been quite interesting. I've spent the past 3 months trying to understand the size of the business and the key issues to focus on. As you know, Opportunity International is a mission-aligned institution focusing on financial inclusion. We focus on people at the bottom of the pyramid. And the task for me is to ensure that we meet more clients. Our impact is visible across the country.
3 months into the business. You've been the chief, is it financial or operations?
Operations.
Okay, in charge of operations, and now you are now the, should I say, the big man here.
Yeah.
How would you assess this sector, the savings and loans, and also microfinance sector?
I have been in this sector for, let me say, over 20 years. The microfinance sector for over 20 years. Transitioning at some point from providing wholesale funding to institutions like Opportunity, and now coming to lead Opportunity International. I think that over the years, the sector has evolved very well. Regulation has evolved. The players have increased despite the cleanup exercise that was done. And that is evidenced in the report from Govt that shows that as a sector, we have increased our asset size to over 10 billion cedis over the past year. So I think it's good. The opportunities are available. The people we are called to serve are numerous. And so I think that the more players we have that participate well in this market, the better for the country.
So, looking at consumer demand,
yes.
What's the key trends like since you took over?
All customers are getting more sophisticated. They are looking out for convenience. They are looking out for good pricing. They are looking out for the total benefits that they get from partnering a financial institution. That is what I have seen, and as at Opportunity International, what we have focused on doing, as I indicated, we are a social-focused institution. We try to see the totality of a customer, and providing convenience to these customers is key, and that's why we have introduced various digital channels that enable them to reach the bank or the financial institution without having to come there. We have introduced channels that allow them to bank with us and to take loans from us. In 2026 and beyond, we will want to add more because of the sophistication of these customers. We want to add more channels that bring convenience and efficiency to the customer and provide similar efficiency also to us. Remember I said that we want to reach a lot more customers. Our success is measured by the impact, the number of clients that we touch. And so, yes, in response to the changing needs of the customer, this is what we are also doing, bringing digital channels into our processes. And also looking at the cost of the loans that we will have to give to the customer at the end of it, because we want to see the customer transform in this partnership.
Yeah. Now, let me take you to your regulator, which is the Bank of Ghana.
Yes.
From last year, we've seen Dr. James Eshun embark on some reforms and all of that. They've tightened supervision.
Yes.
And I want to know how that is impacting on your operations.
For us, as Opportunity International, we welcome every action by the central bank to clean up, to give clarity on the operations. I think the bottom line for the central bank is to have a sector that is very prudent, a sector that protects the customers' deposits. And so all the directives, many as they are geared towards providing a system that people have confidence in. And so we welcome the various reforms. Such directives, most of which come with some cost to the institutions, we notice that it's for the greater benefits of the industry. And that is why, for us, compliance becomes the key issue. We do not joke with compliance with the central bank's directives. We are very proactive about our relationship with the central bank so that we are not chasing after, but we react even when the draft directives come, so that by the time we go live on the directive, we are well positioned to comply. I believe that compliance is good. I believe that the directives are good to sanitize the industry, and I encourage all institutions such as ours to comply with the directive so that it builds the confidence of customers on our institutions.
Still on the central bank and compliance bit, looking at the regulatory reforms and how it's going so far, one is wondering, is this a good, I mean, looking at it from it, whether it's going to strike a proper balance to support your sector, the challenges you guys are facing and all of that. Are we on track based on your expertise within this number of years working with this sector?
Yes, I believe, as I indicated just a few minutes ago, the sector requires reforms. And I'm happy to note that the central bank in the past 2 weeks or so has issued some hints that there are some far-reaching reforms that will be done in this microfinance sector. And like I said, the goal is to build confidence in the sector. There are a number of institutions such as us that are doing very well. Yet within the same sector, there are institutions that are not doing well. And sometimes that casts doubt on the total number of institutions. And for me, I am happy that the central bank is taking steps to reform the sector. Let us, if there are fewer institutions that are sustainable institutions, all the better, because then the confidence within the marketplace will be higher and we can better serve. Remember that our role is very critical in providing jobs for the youth, because we finance the very critical part of the economy, the real sector. We finance agriculture, we finance education. And it will not be the right thing if there are bad institutions or institutions that do not follow any good corporate governance, and that has a replica effect on the ones that are doing well. So I honestly look forward to the reforms that the central bank has promised. I do not know to what extent they will go, especially in the level of capital that will be required, because they have given hints that the capital requirements for the institutions will change, meaning will increase. And I look forward to that. We're happy to get those details as quickly as possible so we start positioning ourselves to take advantage of the opportunities that will come out of those reforms.
You spoke about some institutions struggling. I really don't know much what is really happening, what is making them struggle with these reforms and all of that. From your conversation with these institutions, what are some of the concerns? What is really making them struggle, and how can that be addressed?
Thank you. While I will not assume that I know the exact reasons for their struggle, I can say that what has kept Opportunity International at where it is now, and with the confidence to say we can even do better, is because we have complied strictly with our governance and our risk management activities. We do not joke with these things. As you know, we are an affiliate of an international organization, and standards are very key. Our standards are best practices. And so corporate governance is huge for us. Risk management is big for us. Sometimes it appears we are even so conservative, but it's because we want to keep customer deposits safe. We want to ensure that our stakeholders have a reason to continue to trust in us. I would encourage other institutions to take their governance framework very seriously. Their risk management framework should be tightened to ensure that they are sustainable. That's what I would say. I cannot tell you. I do not know exactly what is causing others to fail. But I think that if you pick these two seriously, you would be sustainable within this economy.
Now, let me bring you to non-performing loans. I know it's really been a big issue within our financial sector, even from the banking space to the non-bank. Now, how is the situation like now for opportunity and also, and other members,
Thank you for that. And also from the regulatory part, you noticed that sometime last year, strict directives were given for the entire banking sector to comply with some limits of non-performing loans. I think that it is in the right direction. You cannot be in the business of lending and allow your loans to go bad. First of all, it will erode all the profits you make. It will erode your capital. You will become bankrupt if you do not check it. And that is what every institution should do. At Opportunity International, like I said, we are mission aligned. We are clear on our mission to serve the people at the bottom of the pyramid. So we do not veer off into sectors that our forebearers, the owners of the company, did not set us up to do. And that is what I encourage institutions to do. Once you focus on the purpose of the institution, you would succeed. Now, on managing your credit risk, there are very basic activities that you should do. How do you underwrite your loans? Is there some one man who makes decisions on loans? For us, no. There are clear processes that you must go through before a loan is approved and disbursed to a customer. How about monitoring? I encourage institutions to enhance their monitoring regime, because once you give out a loan, you need to monitor the client so that the loan is not misapplied. These are very basic tenets in delivering credit. We have gone ahead as of last year in October to introduce a loan origination tool. And this is a tool that enables us to onboard a customer, to start a credit process. It will underscore, credit score the loan, and then we can make decisions on that loan in addition to what the system, the AI-backed system, would do. Why are we investing in this when we have an existing credit, risk management process? Is to standardize the credit appraisal system so that we do not have our NPLs moving up and down. But that once we standardize the process, we are likely to see a standard trend of how decisions are made and whether or not our loans will be repaid, and so forth. So I believe that the credit underwriting process is important. I believe that monitoring and supervision is important. We are a microfinance-focused institution, and we live with our customers. We do not just give loans, we train our customers. We do not just give any training, digital financial services. We are doing financial literacy trainings. We are introducing all kinds of things. When I say the customer as a whole, not just credit and training, but we are looking at the customer in entirety. If you are doing this to your customer, it means you are close to the customer and you understand the customer. That way, the customer has loyalty with you and the customer will repay your loans. So this is the next stage that we are moving to, using technology backed with our customer-centric approach to be within the communities across the country. Yeah.
Customer-centric approach. Now, there were issues of public sector workers,
Yeah.
to be precise, teachers, nurses, and all of that. I mean, that was some 2 years back.
Yeah.
And the association in itself raised a lot of concerns
Yeah.
that they come for loans and they abscond to other parts of the world.
Yeah.
What is that situation like as we speak?
I think from the policy point of view, there's been some improvements between the institutions and the Controller and Accountant General. I think that earlier we had some backlog of payments, and this was a key concern for actors within this industry, to say that some deductions are made, but institutions do not receive the loan deductions on time. That was one of the key issues. The second issue was the exodus of some professions outside of this country. Like I said, it is about your purpose. Why were you set up? For us, strategically, we have a very minimal percentage of our portfolio in that area because our mission is clear, who we should serve. We are not saying that public sector workers who are into viable businesses cannot take loans from us, but we do not focus on financing consumption. We finance production. So that's why if you look at the mix, our product mix, you notice that the loans to public sector workers is a small fraction of our portfolio. It is it is because of what we were set up to do. For some other institutions, that is their focus, because that is a strategic position they have taken. And they may have some bigger issues to deal with when it comes to this. Let me link this to the discussion about risk management, that over-concentration can pose challenges for you. And so I encourage that as institutions, we should continue to look at our portfolio mix and say, how can we diversify so that where there are issues in one sector, it does not entirely touch the survival of the institution.
But are you still giving loans to these public sector workers?
Yes, we are. We are, but in a very, like I said, it's not a huge portion of our total portfolio. We have looked at which professions are at risk at this point, so that we do not expose ourselves so much into it. So as an ongoing process, risk management process, you need to be reviewing what are the sectors I should continue with. It does not mean that I should stop completely, because we are providing a critical service to the public sector workers, albeit in a smaller portion of our portfolio.
And with respect to your background checks, what goes into that before you give those loans, knowing what has happened in the past?
First of all, what is the professional area? You need to be clear what the profession is. Are teachers the one living the most, or there are doctors who are living the most? I've not mentioned who is living the most, but to say that in the first place, you need to check where the risk is. There are some professions that are very, I can say they are stable. They do not move out as much. And so that is where we will. We go ahead also to take guarantees from their relations, or they should provide us guarantors. So that becomes a fallback position if that professional has a...
And are there collaterals too?
No, we use guarantees, just guarantees, and that's in response to what happened, I think about 3 years ago. We found that it was a huge situation for us.
Now, still on the NPLs, but then let's look at the macroeconomic environment. Somewhere last year we saw policy rate was reduced to somewhere 18%. We've seen inflation last November was 6.3%, interest rate and all of that. How is all of these macroeconomic indicators impacting the repayment of loans by your customers?
I can say that early days yet to give definite responses, but anytime the economy is stable, it provides better disposable incomes for for borrowers and they can pay. Okay, so yes, it is for me welcoming news. It's something we should encourage, and I think that the policy decisions, the ministers and the central bank should be applauded for what has happened. I would encourage, we pray that this is sustained, because if we have a predictable environment, even from a risk management perspective, you are able to project the cash flows of your customers if the economy is predictable. But where the inflation can jump up or currency can jump up, then the cash flows are difficult to estimate. The clients find it difficult to plan because they are unaware of what can happen. And I think that we've experienced some things in the past years where things were changing really quick, and that posed some risks to institutions. I think that let's applaud the owners, the drivers of the economy, and encourage them to sustain it, because the business environment would improve, benefits will go back to the business, the youth will have jobs to do, because these our big clients can expand, and once they expand, they will need more hands. And that comes back to the benefit of the country.
We know Opportunity International focuses much on supporting SMEs. Yeah. How are you guys supporting these same SMEs, women-led businesses? What are the strategy? What are the plans, basically?
Yeah. Thank you. That is our focus. The people who hitherto will not have access to finance, these are the people we focus on. The strategy is to reach out to them in a big way. 2026, 2028 strategic period, this is what we want to do. Women-led businesses, production, agriculture, education. These are the areas that we are going to focus on in a big way, but within a very well-controlled environment. Where we are managing the risks as well. We want to expand to regions where we are not, especially in those regions where we have the masses of the people requiring funding but do not have access to those funding. We want to focus a little more on women and women-led businesses. We are introducing other innovative things, so our customers should look out for very interesting, additions to the services that we currently offer. And I believe that this partnership will go a very long way to benefit our clients first and also benefit us.
Are you also seeing a renewed demand for credit from these SMEs? You spoke about some specific sectors, and also I want to know, as away from the public sector, which other sectors present more opportunities and which other sectors also, comes with some bit of risk?
Yes. So the opportunities are in the areas of the economy that are expanding. Look, agriculture.
Yeah.
Agriculture provides huge opportunities, yet agriculture is probably the riskiest sector, because this is rain-fed agriculture, depending on the weather all the time. But since 2011, as an institution, we have built our capacity in financing agriculture. And it will surprise you to note that providing funding to smallholder farmers has turned out to be one of the best, portions of our portfolio. It's becoming an important part of our portfolio. The repayment rate would amaze you, 98% sometimes. And this is where, if we want to go rural and provide support, we will have to expand in agriculture. Other areas that are coming up include manufacturing, small-scale manufacturing and processing. We are looking at these areas, especially within the agri value chain as well, transforming the products, the raw materials that we pick into, refined products that can come to the table. We are looking at that. Like I said, education is key. Our mission is to transform lives. What a better way to transform lives than through education? So we are providing financing to private schools in rural communities, which no one will provide funding to, because when you see the school, you know that these people may not pay the loans. These are the schools we are trying to help to build capacity, build infrastructure, add, some furniture here and there to enable them take on more children, so that our children will not run to do galamsey because the schools are not readily available or do not have capacity within those communities. So education is another area that we have been focusing on, but we want to do that in a big way going forward.
Finally, technology.
Yes.
How is opportunity leveraging on technology to more of reduce operation cost and all of that?
Yeah.
And also to get more of your customers on board. Yeah.
Yes. Thank you for that. And as I indicated, we want to do these things in a big way. It is costly to do micro loans. It's very expensive to do small loans. And so technology will enable us to do it the way we want to do it.